Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so let's look at what is going to be happening this week. You've got a shortened week because it's Good Friday on Friday. That's why it's called Good Friday, Easter weekend. You've also got a lot of reporting out this week. You've got the banks reporting, which is JP Morgan, Morgan Stanley, Citibank, Goldman Sachs, to name but a few, that were reporting their profits. Now, the profits could have been impacted by the geopolitical crisis, which is the war between Russia and Ukraine, and therefore you could have an impact on their profits. So I would personally take a guess that they're going to miss their profits, they're going to miss their expectations, and therefore the price could go down on those major banks. Keep an eye on that, because that is really something very, very significant. Also, you've got this week the CPI, which is the Consumer Price Index, reporting on Tuesday. Just to give you a bit of background, the Consumer Price Index is the inflation measure in the States. Saying that, it came in last month at 7.9%, and they're expecting to come in at 8.4%. However, I think that is probably going to be a little bit short, and I would expect it to come in at 8.5 to 8.6%. That's going to add further pressure on the central banks to take action. The Consumer Price Index is the consumer inflation report. You have to remember that what's happened in the last month, or more like 6 weeks, there's been an escalation, an increase in all soft grains, whether the wheat, barley, corn, rice, has all gone up in price. In addition to that, obviously the energy stocks and energy providers have gone up in price. The energy commodities have gone up in price, like oil has gone up in price. Even though it's come down overnight, it's gone up in price, and therefore that's going to feed through to the consumer. The basket of goods that the consumer would buy, which is what the CPI is measured on, has gone up, and that is going to put further pressure on all central banks to take action. You have to remember that some of the presidents of the Fed, which including James Bullard and Lael Brainard, have said that the Fed is behind the curve and will probably have to increase rates by 0.5%, 50 basis points at each meeting, looking for a 3 to 3.5% interest rate by the end of the year. I've always said that that is simply not sufficient. It's going to have to go to 5% in order to combat inflation. So something to keep an eye on. Also, if you look at the 10-year Treasury, the 10-year Treasury was running on Friday at 2.71%. It's nearly running at a 4-year high. That is indicating that interest rates are only going to go higher. So if you take the CPI on Tuesday and take in the banking reports, a raft of banking reports is going to come out this week, you're going to get a good indication as to where the markets are at. Overall, I do expect inflation to keep on rising. The banks have not taken enough action, and that is definitely going to have an impact overall on consumer inflation and consumer spending. You've also got full employment in the States, in Europe, and in the UK. It cannot go more full than it is, and therefore that is going to cause a wage price inflation, simply because employers, businesses, and companies will have to start offering and paying a higher salary in order to attract those workers to come and work for them. So you're going to have probably a wage earnings inflation as well, feeding into the economy, and that's not going to please the central banks at all. So that's another factor. Regarding overnight markets, all overnight markets are down. You've got the Dow down, the Nasdaq down, the S&P down, the European markets are down, oil is down, gold is down, and Bitcoin is down. Why is that? Because it looks like Russia is going to be intensifying its war on the Eastern Front, and that has sent shivers down the markets, indicating that there's going to be no end to this particular crisis, and that will cause further oil price rises and further pressure on energy price rises going forward. The Russians are not going to back down from Ukraine, that's for sure, because Putin does not want to lose face. So the overnight, apparently, there was some bombardment of a train station where 52 people were killed in eastern Ukraine. And the West is not really coming to the assistance of Ukraine. I don't think it really wants to, because it does not want to escalate the war any further. So that's going to have a further impact on lengthening the war. It's not going to come to a stop. It's not going to come to an end. Russia will continue until it reaches its goals, whatever those goals are, whether they're economic or geographic. We just don't know what the true intention of Putin is. I would ask you, what do you think is the true intention of Putin going on this particular war and this crisis with Ukraine? Looking at Bitcoin specifically, as I mentioned over the weekend and mentioned last week, it looks like Bitcoin is on a downtrend at the moment. It did reach a high of 48,000 and is likely to float down all the way down to about 35,000, maybe 32,000. That level, it becomes an attractive buy. You've also got Tesla came off last week, and you've got two interesting ones, which is Twitter and Hewlett Packard. Twitter went all the way up to above $50, has now floated down. In fact, one of my colleagues took out a put option at $50 and made some significant money on that option last week. You're probably going to expect those tech stocks to go down even further, because the tech stocks are going to be under pressure from fears of an interest rate rise. And with inflation burning as it is, then the Nasdaq and the tech sector and the growth stocks are going to be impacted the most by any interest rate or inflation fears within the economy, because people will move away from growth stocks and highly speculative risk assets and move over to more secure assets, which is money in the bank. If you need to contact me on LinkedIn, on WhatsApp, on YouTube, Instagram, Twitter, whatever you need, etc. This is May Valensky with Driving Markets. Have a good day.